Hello and welcome to our latest Lewis Brownlee Weekly Roundup, covering latest business, tax and COVID-19 news. I'm Sarah Alexander. I'm the Managing Director of Lewis Brownlee, and thank you for joining me today. Hopefully there'll be something of value to you. It's quite a long one today. There's a lot to get through. There's just so much change going on at the moment still, and more to come, hence why we're doing this on a weekly basis to try and keep everybody in the loop and up to date. So let's get on with it. So this week, much optimism on Monday, cautious release from lockdown. Prime Minister Boris Johnson outlined the government's roadmap to release England from lockdown. Rules in England will be lifted in 5-week stages, with 4 conditions that must be met at each stage. These are that the vaccination programme continues successfully, hospital admissions and deaths continue to fall, pressure on the NHS is manageable, and there is no major impact by virus variants. So fingers crossed, all those things will happen, and slowly but surely over the next 4 months, we'll get back to some sort of normal. So on the 8th of March, stage 1, schools and colleges reopen and 2 people allowed to meet outdoors. Care home residents will be allowed 1 regular named visitor, and the stay-at-home order remains in place. From the 29th of March, outdoor gatherings of either 6 people or 2 households will be allowed. Outdoor sports, including golf and tennis, can resume. The stay-at-home order remains in place and people will be encouraged to stay local wherever they can. The work from home policy remains wherever possible, and there should be no overseas travel. So for Lewis Brownlee, we will continue to operate fully from home. Midhurst is being manned. It's got somebody working there 2 days a week at the moment. In Chichester, we have 2 people in every day. But the doors are locked, so and we need to know if you're coming to see us. So if you need to come in and drop anything off, then or pick anything up, then you can just please ring whichever office and make an appointment before you come in, so we know to expect you and we can get the information ready for you and hand it over to you in a secure, safe way. Stage 2 from 12th of April at the earliest. Non-essential retail, personal care, gyms, swimming pools, outdoor areas in hospitality venues such as beer gardens, etc., open with households or the rule of 6. So I think for most people, this is the first step to being able to get out and about more and obviously meet up with people, which is such a relief and something to look forward to. Stage 3, 17th of May at the earliest for outdoors. Most social contact rules will be lifted up to a limit of 30 people. Mixing indoors will be allowed for 2 households, with the 6-person rule for indoor hospitality and elsewhere continues. Cinemas, soft play centres, rest of accommodation sector, hotels and indoor exercise classes will return. So yes, May, quite a lot happening. And then stage 4, legal limits on people's social contact are set to be removed by the 21st of June, with the remaining sectors of the economy reopened. So for me personally, I think it was quite an optimistic bit of news. Some people might think it's not quickly enough, but I think a slow, measured return to normal is the way to go. And I just hope that those 4 conditions can be met each stage of the way, and yeah, look forward to everybody being in the office at some point this year. And fingers crossed, if things go according to plan, we may get to hold our Lewis Brownlee annual staff barbecue in the summer. But we'll see. We'll keep an eye on what's happening and make a decision on that as we progress through the next few months. So moving on from that, 5th of April, end of the tax year. So March is a very busy month in the office, and probably the time where we spend a lot of time getting in touch with clients in quite a short, compact space of time. Almost every client will be contacted, particularly if they're in a company. Because we're 6 weeks away from the end of the tax year, so it's time to be thinking about tax allowances use it or lose it, as the saying goes. So earlier this week, Tom Foster, our tax director, and Shaun Dodson, member of the tax team, have done a video recording of various things to be thinking about, and that's going to go live on the website today. It's a really great video, really informative, very clear, concise, so do keep a lookout for that. There's also a PDF guide for tax planning that's been prepared, and that will be emailed to all clients along with the link to the video. So that'll go to all clients, it'll go to anybody that's registered for this webinar, and you can go into the website and download a copy when that's published later on today. So lots of things to consider as far as tax planning goes, and the guide goes into the detail, but just to give you a brief sort of overview, there's sections there covering company owners, so shareholders, should you bring your new shareholders in. Dividend planning, have you utilised your 0% annual tax-free dividend allowance? Should you be making pension contributions out of the company? Have you lent money to your company? Should it be paying you interest? Have you lent money from the company, and do you need to be thinking about the strategy to pay that back, perhaps by declaring a dividend before the 5th of April? The self-employed, we talk about the tax implications of the Self-Employment Income Support Scheme grant, which is quite unexpected in some cases, not all. If you're a 30th of April, a May or a June tax year in particular, and you're self-employed, you need to be looking at the impact of these grants. But even if you're not one of those year ends, if you're a 5th of April or 31st of March year end, and you have had the grant for rates, because you have a property and you've had a good year, you had some good years prior to lockdown, and you've been claimed all the Self-Employment Income Support Scheme grants, then you may find yourself as a higher rate taxpayer for the first time. And I've seen at least one client where we think that that's going to be the case, and we're going to be looking at his figures in the next couple of weeks to see if there's a way that we can make pension contributions or similar to reduce his income so he doesn't go into higher rates. So do watch out for that if you're self-employed. Employers, national minimum wage is being increased in April, so you must get that right. HMRC do review national minimum wage payments, and employers can often get it wrong. Be careful if staff work unpaid overtime, or if they're unpaid while being transported to a place of work, or if you've asked staff to purchase items themselves out of their pay. For example, if they pay for their own uniform, that is a deduction to their pay, which might bring them below the national minimum wage. So a few things to look out for on that. Working from home, any employee who has at some time during the 2020-21 tax year been required by their employer to work from home for a significant period of time can claim tax relief at a rate of £6 per week for the whole of the tax year. So there's an expectation that the employee should be able to demonstrate that working from home was not their choice. They had to do so either because they were instructed to do so by their employer, or required to self-isolate, or were instructed to stay at home on health grounds. And that's going to be most people this year. You know, we said to all of our staff, you have to work from home. We helped them get set up, but there was no alternative. They couldn't be in the office. So we paid them £6 a week for the whole of the tax year, tax-free, because that's what the rules allow. Other things to consider tax planning wise, perhaps it's time to go electric. So for a while, it's generally not been worth having a company car. The benefit in kind rates have been creeping up over the years and getting quite expensive in tax. But the exception to this is the very low emission vehicles. So if you are looking at your cars, perhaps it's time to take a look again at whether or not you want a company car, and particularly an electric car. And like I say, Tom and Shaun talk about that a little bit in their video, and there's more guidance in the accompanying booklet. IR35 changes 5th of April, so contractors using their own personal services companies need to be looking at that. We've done a video on that as well. Christine Deacon and Jess Morris from our business services group talk through those rules changes. It's about a 10-minute video, covers it all in, highlights the key things, so worth looking at if you think you might be caught by that. Finally, from a tax planning perspective, for the wealthy, have you thought about your inheritance tax position? Will you qualify for the main residence mill rate band? Bearing in mind a home must be closely inherited and a £2 million threshold applies. So lots of planning points as far as inheritance tax that you might want to be thinking about. So yeah, keep a lookout for that video and that PDF, some useful hints and tips on that, and get in touch if you want to talk through anything in a bit more detail. Okay, so the economy. Last week we heard that the UK borrowed its highest ever amount since 1993. It was the first time in 10 years that more had been borrowed in January than collected through tax and other income. And this emphasises the scale of the government borrowing to support businesses and protect jobs over the last 12 months with the furlough scheme and the self-employment income support scheme grant. The UK's debt is now over 97.6% of gross domestic product, which is its highest in 60 years. So quite an extraordinary year that we've had. We believe there'll be a bounce back when restrictions hopefully get lifted in the summer. There's been lots of people that perhaps have been fortunate enough to not have their income affected, and will make the most of the summer, hopefully. Let's have a good summer and lots of people going out and encourage the economy to bounce back. Brexit news. So, you know, not only dealing with a global pandemic, lockdown and all the challenges that spring, we've also had Brexit at the start of the year. So last week we saw the former Brexit negotiator Lord Frost join the cabinet to take charge of forging a new relationship with the EU. The appointment indicates that negotiations between the UK and the EU will be ongoing for many years ahead. Lord Frost recently commented on post-Brexit matters. I think it has been more than bumpy in the last 6 weeks. I think it has been problematic. So maybe that's a bit of an understatement. Those that export and import will probably be able to talk more about that. So there are many unresolved issues, notably the UK financial services sector not having any access to EU customers without local authorisation from individual EU countries. The FCA, the Financial Conduct Authority, has updated its guidance for firms after the transition period. And there's a link to the FCA website that will be sent accompanying this webinar. Some good news though, small and medium-sized UK businesses needing support on customs duties and VAT will be able to apply for the SME Brexit Fund for a grant of up to £2,000 to pay for professional advice or training. So HMRC has published initial guidance on the grants available under this new SME Brexit Fund. It states that UK established businesses with up to 500 employees and a turnover up to £100 million will be eligible to apply for a grant to support staff training or to pay for professional advice. So the grant is up to £2,000 and it will support organisations that are new to exporting or importing goods in meeting requirements on customs, excise and import VAT, as well as safety and security declarations. So the initial guidance clarifies that to be eligible for a grant, the business must have been established in the UK for at least 12 months before submitting the application and must have met all its previous tax or customs obligations. The guidance also confirms that alongside paying for training on customs processes, systems and rules, the grants can be used to pay for professional advice to ensure the business meets its obligations. So the Institute of Chartered Accountants in England and Wales, who is our regulatory body, their tax faculty have requested confirmation from HMRC that chartered accountants with expertise in customs duties and import VAT would qualify as providing the professional advice upon which grant monies could be spent. So take a look at that. That might be something that might help you navigate these changes. Again, the email that supports this webinar has the link. You'll be able to see the details there. Moving on then to COVID-19 government support news and government changes and things that they've been doing. So not necessarily just support in this section. Health and safety spot checks and inspections. So we've heard from a number of clients that the health and safety executive is carrying out spot checks and inspections on all types of businesses in all areas to ensure that they are COVID secure. So HSE are making calls to businesses so they can give advice on how to manage the risks and protect workers, customers and visitors. They're also working closely with local authorities, assisting them in the sectors they regulate, such as hospitality and retail. Now, these visits are spot checks and they just turn up. In some cases, we're certainly aware of a few times that that's happened, just a knock at the door, somebody from the, officer of a business that's been subcontracted by the HSE to do this. So officers that visit premises will be carrying identification from their business and a letter of authority from the HSE. So if you wish to verify an officer that calls or visits your organisation, there's a phone number that you can call. I'm not going to read it out. It'll be in the email, or if you go onto the government website, the link will be in the email. The phone number that you need is on there. But yeah, if somebody knocks on the door and said, I'm from the HSE and I'm doing an inspection, then that's not a scam. It is true that that's what they're doing. Okay, so particular sector news and effect of COVID, the impact of UK travel on UK travel and tourism. So last week, the Office of National Statistics released analysis of industries related to travel and tourism in the UK that have been affected by the coronavirus pandemic. So monthly air passenger arrivals in the UK was close to 7 million in February 2020. In April 2020, it was 112,000, a fall of 98%. It's just extraordinary. Greater London saw the largest fall in room occupancy of any English region from 2019 to 2020, with just 20% of rooms occupied in July 2020, compared to 90% in the same month in the previous year. Accommodation and travel agency businesses saw the sharpest decline in turnover during the first national lockdown, falling to 9.3% of their February levels in May. Just the impact on that industry is just huge. And there is other statistics, but I'm not going to just rattle those off. But it brings me on to, I guess, the plan for recovery. So we can't predict the date of return to normal. We've got a little bit of an indication over the next 4 months. But, you know, with those practicals, those milestones needing to be in place for that to happen, we're not really certain and can't predict fully when normal will be. So there are some practical steps you can take to minimise the potential disruption to your business and maximise your opportunities for recovery. And I've got one word to say: cash flow. Cash flow, cash flow, cash flow. It's all about cash flow. Review your budgets, set realistic targets, look at whether they're achievable, look at the roadmap the government have set out. What if that slips? How long is that likely to slip? What's the impact going to be on your cash flow? And I think you need to be looking at least 12 months in advance. What's the winter going to bring? Is there going to be more restrictions in the winter if the vaccine perhaps doesn't get the cases down to an acceptable level? Who knows? Cash flow, cash flow, cash flow. Budget, budget, budget. But also review and flowchart your processes in your business. We're doing a bit of this at the moment. Some of our things that we do, we use 5 or 6 different systems to produce an end product. We really need to go through all of those processes. Is there a way that we can jump from one step to another, or change how we get from one step to the other to reduce the time spent and improve efficiency? I would encourage you to talk to your team members, which is what we're doing, to see if they've got any suggestions of ways that the processes can be streamlined and simplified. Maybe brainstorm about efficiencies. What's the things that take so much time that we could do stop doing or certainly do better. I would connect with your long-standing customers, relationship building. Have you you're all in it together, working with each other, and will come out the other end. So put a bit of extra effort into existing relationships and new ones. Review your list of products and services. Eliminate those that are not profitable or are not core products or services. Perhaps use the current lockdown as an opportunity to reflect on the exceptional challenges that we've all faced as a result of COVID-19 over the last 12 months. What were your most significant accomplishments? I think for a lot of businesses at the start of lockdown, the shock of it and the unprecedented nature just meant that a lot of things ground to a halt. When restrictions were lifted in the summer, by then people had adapted and were doing new things. When the second lockdown happened in November, a lot of business were able to carry on during that period, when in the lockdown in April they hadn't. So why was that? What have you learned? How can you continue to improve on that? Equally, what didn't go quite so well? What really set you back? What was your disappointment? Consider what you've learned from these experiences and improve your prospects for the coming year and beyond. And I think the final task to set yourself and the business is some specific goals for recovery, and make sure that you share those with your teams, involve them in that journey, and reassure them that there is a plan and there is a route out, and as soon as possible we'll be all back to normal. Practicalities though, and that cash flow piece again, just to remind you about your VAT. If you deferred that VAT last year, you've got to pay it by the end of March, or have agreed a payment plan. The HMRC new scheme to defer that payment is now open. You can apply online for that. Open for a period of time. I'll come to the dates later, so log in and get that sorted. Your bounce back loans, they'll need to start to be repaid soon, though they have deferred that requirement for a short time, so it's not the 12-month anniversary of when you took the loan. It could be further along, but you need to know your cash flow, you need to understand when your income's going to start to pick up, so that you can work out and talk to your bank about when you're going to start to repay those loans. And also the end of furlough. So at the moment, the furlough scheme is planned to come to an end at the end of April. It might not. There might be an announcement next week as part of the budget whether or not that's going to be extended or modified, perhaps up to June at least, maybe because of this roadmap. But once furlough ends, will you be able to afford to keep everybody on? Which isn't a nice thought, but is one that as a business owner and employer is something that you do need to be thinking about. And I recommend that you look at that sooner rather than later, and to avoid it, if you possibly can, having to make redundancies. And there's a process to go through, and you'll need to take some HR advice as far as that goes. But is there a way that we can avoid this and involve your teams and HR professionals in that? If you're on Xero, we have an add-on called Fluidly that we can connect to your Xero data. It's really important that your Xero data is monitored and kept up to date, at least weekly, daily if you can, to get the best out of this app. But if you can for free, if you connect up to this app, there's no cost. It will give you a 3-month rolling forecast. So, and that 3 months just carries on forever. It's not, you can have a 3-month rolling forecast as a one-off. It's a 3-month rolling forecast forever, without any charge. If you want a longer, so if you want the forecast to run out for a longer period, then there is a charge for that. But worthwhile looking at least that 3-month position, particularly with lockdown lifting, hopefully in 4 months' time. If you're not on Xero, then there are other ways of doing cash flow. Please get in touch. We can talk you through that, give you some templates and assist you with that. Okay, self-assessment payments, including Class 2 national insurance. So information about payment of Class 2 national insurance. These were the ones that if you pay for your self-employed, And you used to pay these weekly or monthly. It was a fixed weekly amount. It now gets paid as part of your self-assessment payment twice a year. And as one of the government's supporting measures, self-assessment taxpayers were given the option to defer payment of their July 2020 payments on account until January. If you deferred this payment, you may have had to pay 3 payments on the 31st of January. So you deferred July payment, your 1920 balance in charge, and then your first payment on account for 2021 tax year. If you had difficulty making that payment at the end of January, then you could have chosen to set up a time to pay instalment with HMRC. And if you pay self-employment, if you're self-employed and pay Class 2 national insurance contributions, you will usually pay them at the same time. But if you're paying over that, if you've deferred those 3-month payments through a time to pay arrangement, your deferred July payment on account will be cleared first, having the oldest due date, because that will minimise the interest. But that could result in your 1920 Class 2 national insurance contributions being paid after their due date of the 31st of January. And where Class 2 national insurance contributions are paid after that date, it could have a detrimental effect on certain contributory benefits that are claimed. So just something to flag up there. If you think that if you have had a time to pay arrangement and you're paying Class 2 national insurance, it might just be worth checking what the implications of that could be in the future, and or get in touch and we'll have a chat with you, and we can notify HMRC on your behalf so that they can perhaps change the way they allocate the money so that you keep your NI record for that year, because essentially that's what you want to do. Paying by instalments, so you can pay your tax by instalments if you were unable to pay in full by the end of January, but you needed to have, if you've not filed your tax return yet, you need to file it as soon as possible. There's a penalty if it's not filed by the 28th, which is Sunday. HMRC need to know what you owe before they'll set up a payment plan, hence you need to get that in. If you owe up to 30,000, you can arrange your payment plan online. You don't need to speak to them. Once you file your tax return, it takes 72 hours for their system to update and enable you to contact them to make the time to pay arrangements. So the tax return, when it's submitted, is submitted immediately. So you don't need to worry if you submit on the 28th of February that the return's not gone in for 3 days. It's just the system working out what you owe that won't be updated. So yeah, get your tax return in, wait 72 hours, and then contact them if you need to make a payment plan. Interest will be payable on any time to pay instalments, so you need to check your interest rates on that. And if you're unable to pay, then please talk to us about your options and we'll assist you with HMRC if we can. Okay. Self-Employment Income Support Scheme grant. So the 3rd grant closed in January, and there's an announcement on the 3rd of March, next Wednesday, about the 4th grant. So no doubt that'll be something I'll be talking about next Friday. So I'll see you then as far as that goes. Coronavirus Job Retention Scheme. So you can start to submit your claims for February now. These need to be made by Monday, the 15th of March, so 15 days. You can claim before, during and after you process your payroll, but it's best to do it once you're happy with the payroll figures for the month, because incorrect claims can lead to issues, as we talked about before. Eat Out to Help Out scheme, receiving payments you are not entitled to. HMRC have produced a fact sheet containing information about the recovery of overclaimed Eat Out to Help Out payments. So that's hospitality sector. Last summer, you might recall, they encouraged us all to go out and support the recovery of that sector. People in that sector, so the pubs, restaurants that claimed it, are being asked, I guess, to check that their claims were right. And if they weren't, there's a link to the website as to how to deal with those. There's also some new guidance for landlords and tenants in the private and social rented sectors to explain the possession action process in the county courts in England and Wales, so that guidance has been updated to reflect new legislation extending the prevention of enforcement of evictions in England during the national lockdown and the launch of the mediation pilot. So I'm not going to go into that in any detail. It's just something to flag up. We have lots of clients in the property sector, so just wanted to flag that up. No doubt they're already aware of it, but if you're a tenant, you might not be. So the link's in the email. I'm nearly done. So it's been the longest one so far. Apologies for that. So I think maybe missing last week's has meant a lot more to talk about. So final thing, roundup of dates. So from the 23rd of February to the 21st of June, the VAT deferral payment scheme is open. So any VAT from last year not paid, you can go onto HMRC's website and arrange payment plan up to 11 months. Can't do that for you. As I've said before, you need your own government gateway. So that's now open, and you've got till the 21st of June to opt into that scheme. 28th of February, self-assessment filing deadline, £100 penalty if your return's not submitted by then. If you're a partnership, it's £100 per partner. So do make every effort to get that in if you haven't already. 1st of March, I've not mentioned this particular change on this session today, though I have on others. Domestic VAT reverse charge for construction services. So that starts on Monday, and we've got a number of clients still struggling to understand whether or not it affects them. We're convinced in those particular cases that it does, and they need to take some action. There is a video on the website, on our YouTube channel, specifically about that. The feedback on that video is that it helps the person that watched it understand much more about what it all means. So highly recommend you go and watch that video. 3rd of March, 5% penalty on if you've not paid your tax. So or get that payment plan time to pay arrangement sorted. 3rd of March, details of the full self-employment income support scheme grant were expected to be announced. And of course, 3rd of March is budget day. We're expecting an increase in corporation tax to be announced. Speculation is from 19% to 23%. I don't know whether that's going to be an immediate jump. We'll find out. And then the other thing I've seen this week is an expectation of an extension to the stamp duty holiday, which was introduced at the start of lockdown last year to support the property sector. So, and there's lots of, well, it's going to be a busy day, I suspect. So we'll cover what we can on that next Friday with more the following week, because I don't think we're going to have, I don't think half an hour is going to be enough to go through that all, to go through it all. So one last final thing. I know I've said finally before, I mean it this time. Finally, March the 3rd, not only is it budget day, but it's also the Lewis Brownlee Fancy Dress fundraiser day. So all the team, obviously still working at home, will all be working in fancy dress for the day to raise funds for Stone Pillow, which if you're local to Chichester, no doubt you're aware of this fabulous local charity that supports the homeless. So we've set up a GoFundMe page for donations and would appreciate any support that you can give. And we'll be posting photos throughout the day in our social media channels of the various outfits. So keep a lookout for that. And that's it for today. So gosh, how busy. There is so much happening. Hopefully these roundups are useful. There's lots of that I need to talk about, and no doubt everything doesn't apply to you, but hopefully there is something in there that is. And then please do get in touch, look at the website, follow the social media pages if we can help in any way. So thank you for your time today, and I'll let you get on to the rest of the day. Have a wonderful Friday, and I shall see you next week. A busy week next week after budget on Wednesday. See you then. Bye.